Thank you for joining me. I'm Alex, and I would like to do an analysis of Carnival Cruise Lines, or Carnival Corporation as the corporation is known. So what they do is cruises, shockingly enough. And current price is $44, which gives them a market cap of $31.7 billion. They have a dividend yield of 4.44% with a payout ratio of 45%, which is amazing. Current revenue $18.8 billion, which is slightly up. Earnings of $3.2 billion, which is up significantly. And that gives them a PE of 10. Just slightly over, not under, but 10 is amazing. Total assets $42 billion. Total liabilities $18 billion, which gives them a total stockholders' equity of $24.4 billion. And what I kind of wanted to know when I did this analysis was how consistent they were and if they're going the right direction and what really the risks are here. And what I found was that not only is the revenue increasing, it's very consistent over the past few years. The earnings are fairly consistent over the past few years, and the total stockholders' equity keeps going up slightly. And all of that seems to me that this, at this point, seems like a reasonable investment. A total stockholders' equity of $24 billion means that they're likely not running out of money anytime soon, even if they were to, enter rough waters, so to speak. So I would say that they can weather a reasonable recession. They've had a lot of things going wrong lately, in that there were quite a few cruises that kind of had a disease outbreak on board, and the whole market really was kind of in doubt with all that going on, because significant disease outbreaks on a cruise ship are very bad, obviously, and there's really no getting away from that. And in one case, they actually had to quarantine the boat and see what it really was that was infecting people before people could get off. And obviously, that takes a few days. It's not that major, but big headlines, big problems, people are getting scared. So I think that is in part what's causing the PE of 10, which I think is amazing. So I think you'd be hard-pressed to find a lot of companies that have a dividend yield of over 4% with a payout ratio of under 50%. So if you're a dividend investor and you don't mind taking a little bit of risk, I think this is a very nice stock for that reason alone. The PE of 10 is just icing on the cake, and the balance sheet looks amazing. So I think all that put together, it might be one of the best stocks I've looked at in recent history. So for a value investor, looks amazing, good balance sheet, good PE, good dividend, good payout ratio, and the revenue is growing, and the earnings are growing, and that's pretty much all the stats I have. So just overall, it looks very nice at this point. So growth investors might be out at this point. I really don't see them growing at a significant rate from this point on, unless there is a huge influx of fairly wealthy people. So if they were to expand towards China, India, the emerging markets, and people there liked cruises and went on them, then I think that there might be some growth there. But I think for a growth investor, it's better to wait and see if and when we get there. But for a dividend and a value investor, I think this, from everything I can see, looks pretty amazing. So do some research, look into the stock, and I would probably open a reasonable position. I wouldn't make this your main stock, because safety of principle should be the one for the main stock, so that you don't end up losing a lot of your money. But the consistency over the last few years have me somewhat calmed down. So I think that a reasonable position, not even a speculative stock, so depending on how well you're diversified, makes sense here. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.